to talk about the topic of bank reconciliation. And I feel like it's one of those topics where as you do more and more of these over the course of your career or even personal life, you kind of just get used to the processes. It's one of those things where if you're methodical and you can just go from step A to B to C just like that, it can be very, very easy. And you might be able to do, 99 of those in a row that way, but then you get to that 100th one and something doesn't go right. And so I'm hoping that what I can talk about today will help you troubleshoot any of those issues. And I kind of also just feel that it's one of those things where you might understand that you have to do it, but you might not understand the importance of it. I know in my own personal experience, when I was probably 15 or 16 years old would have been when I first got my checking account. And when I got that first bank statement coming in, my mom would have definitely sat down with me and showed me how to do a bank reconciliation from start to finish. And 15-year-old John probably thought it was stupid, pointless, didn't understand it, and probably showed my mom a little attitude. So sorry, Mom. But now that I've been able to, go to college for accounting and, progress through the accounting field with about 10 years of experience doing, I've kind of been on both sides of it where I'm preparing it as well as auditing it. So I feel like I can provide a little insight into that. So my goal with this presentation is basically to, walk through what it is, why we do it, the process, and then kind of give you some troubleshooting tips and tricks for those situations where it doesn't go right. Situations where instead of it taking 1 hour, it might take you a full day to do it just because you run across issues. So the first thing that I wanted to talk about is, just kind of give a basic definition of it. I could have definitely opened up a Webster's dictionary, but I kind of wanted to put my own touch on the definition here. So the easiest way I can really describe it is to just say that it is a process where an entity's cash balance on the general ledger is compared and reconciled to the bank statement. So, just a quick example, you may write a check for $1,000 on December 31st, and your bank statement, whoever you sent that check to wouldn't have had a chance to deposit that check and then have it clear your bank. So your general ledger may show a balance of $9,000, but the bank statement shows $10,000. And so that $1,000 check right there is the difference. And so that's basically, that's definitely the easiest possible reconciliation you could really come up with. But, it's just some other items. I talked about uncleared checks. So as you're doing this, you will compile a list of checks that you have written basically before the bank statement date that just haven't had a chance to clear the bank. You're going to compile that, you're going to add it up, and that will factor into your reconciling between the two amounts. The next most common example would be deposits in transit. If you go to the bank on December 31st with a deposit of cash and checks for $1,000 and you deposit it, with the teller there, chances are it's not going to show up in your account until January 1st or January 2nd. So that's another example where it's kind of just a delay between how you record it and how the bank records it. So that would be another item that would show up on your bank reconciliation. Another example would be interest earned. So typically banks will calculate an interest earned based kind of on like your average daily balance for the month. And so you might not know that until you get the bank statement on January 5th. So the bank might deposit that into your account December 31st. And unless if you are really, really good on keeping up with your online banking on a daily basis, you won't know that it hit your bank until you get your bank statement. So in this case, that's kind of just a chance for you to catch up and record that interest income when you get your bank statement. And then the last one is kind of just miscellaneous ones, some ACH and wire items, some NSF fees, some service fees, stuff like that. Again, that's something where, again, if you don't keep up with your online banking on a daily basis, you might not know that those are even coming out of your accounts. So when you're reconciling your accounts, this is your chance to catch up on that. And so really, the bank reconciliation process is important because it serves as a periodic check for your cash. If you look at your balance sheet, You should really have support for all your balance sheet items for capital assets, receivables, payables, debt, all of it. In the case of cash, your bank recons are great support for that because it basically shows, how you're getting to your general ledger cash utilizing your bank statement, which is an outside source, and showing all the differences in between it. So it's great support for that. And it, like I said, it's your chance to catch items that you hadn't previously recorded. If you don't do these for a few months at a time, you're going to be missing, interest income, stuff like that. It can help detect fraud. It is typically a good idea to have, if you have the accounting staff available, have someone other than your typical check writer and the person doing the deposits. It's a good idea to have someone else prepare your bank recon because they might see something worse that might be fishy that someone else might be doing. So it is a chance to detect any fraud that could happen. And it could be a good chance to identify any bank errors. Banks don't like to admit this, but they do make errors from time to time. And so just from personal example, I've had times where I go to the bank with a deposit and I want to put in my checking, but they accidentally put in my savings. And so I think I have $100 more in my checking. I try and write a check out of there and the funds aren't available, so they try and charge me a fee. So that could be an example of an error that the bank made. And this process can help you identify that error and go to the bank and say, hey, you need to fix this. And as you can see from the image on the right there, if you are unable to reconcile these differences, the consequences can be dire. And so just to kind of go through the process, and I have got two side-by-side comparison there with a paper and Excel version on the left and a software on the right. And so you might also see there's a little symbol right in the middle, which is basically just a greater than pointing to the software because that is definitely the preferred method. And I'll go over that later. But if you do go the route of paper Excel, and I've done this before myself at a previous job, and so this list of items is kind of just based on my experience doing it. But the first thing you're going to want to do is start with your prior month reconciliation because that will show as of last month what was outstanding for checks and deposits and anything else because those amounts may have cleared this month. You will also want to print off a cash ledger for the current month that you're reconciling. That will show any, again, checks or deposits that you would have recorded during the current month that may have cleared this bank statement. You're going to want to grab or print your bank statement. And basically, if I can help you visualize this, you'll have kind of like a bunch of sheets of paper right in front of you. You're kind of just going back and forth and highlighting, okay, this cleared the bank statement as a check. Oh, here it is on the ledger. I'm going to mark it there. That's basically just saying it's cleared. And so once you're done with all that, the goal is to basically be able to compile the new list of outstanding checks, deposits, any interest, anything else, so that you can reconcile from the bank statement amount to whatever is recorded on your general ledger. And hopefully it goes well. If it doesn't, you might have to reprint some stuff. You might have to go back looking at some stuff. But it's also a good chance to record any transactions, like I mentioned, interest income or any service fees that are on the bank statement that you didn't know about before. This is your chance to record these in your general ledger. And hopefully by this, you can show a check figure of 0, meaning that everything equals. And then by the time you're done with this, you're going to want to buy a new highlighter because it's a lot of highlighting. So the one you're using probably doesn't work anymore. So going to the right side now, and my experience with doing software recons is limited to QuickBooks. So the listing I have is based off my experience with QuickBooks. And so I know the first thing you'll do is you'll enter your bank statement balance for the current month. It should have saved from your prior month what the ending bank statement balance was. So from there, your software will know the amount of transactions you should be marking as cleared. It should also show you a list of available transactions to have cleared this month, basically. So it'll basically draw on your current month activity as well as any past reconciling items. So you're going to check off all those, every check, every deposit, everything. If there are any that, again, interest, NSF fees, stuff like that, that you didn't have previously recorded, you will want to record those. Otherwise, your recon will not equal. And once all that's done, hopefully again it'll say that everything is equaling. I know in some cases if you're off by like $100, I know you can kind of just put that to unreconciled differences. It is an option for you just to kind of get through it, but it's definitely better to try and find the issue before you're just doing that. And once you're done with all this, I would print it for your records. And I say that because in my experience with QuickBooks, depending on the level of software you have, you might not be able to go back to old months and print off old reconciliations. So say if you did your December 2022 reconciliation, then you also did January, February, March, April, May. The only one that you can print off is May because it will not let you go back to December. And so definitely print for your records, or if you're paperless, just save it onto your computer so that when the auditors come asking for them, you'll be able to show it to them. And the final month of the year is definitely the most important, but it's definitely important to keep all of them because they might want to look at your May one or your August one. So definitely keep all of them. Now, this is basically just an example of a good one on the left and a bad one on the right that just doesn't equal. I'll admit it's a very basic bank reconciliation. There's probably some larger cities and counties out there who are jealous of this one. But, up in the top right there, I kind of just have it where it shows the bank balance for the prior month and the current month, and then all the cleared transactions from the bank statement in between. This part isn't completely necessary, but I would say it definitely does make it easier to have this up there. And so the one on the left one is the one that equals. And you can see that from the bottom right because it's a good idea if you're doing an Excel to have a check figure there. So that difference there is basically just comparing the amounts to make sure that they equal. The adjusted balance is going from your bank balance to all of your reconciling items and then comparing it to your balance per ledger. It shows all the outstanding checks and deposits after basically going through the entire process of highlighting everything. In this case, the one on the left came through as equal. Now, the one on the right, you'll see there is a difference of $775. And so basically, some of you out there probably saw this right when I switched to the side and immediately saw what the difference is. So kudos to you. But basically in this difference, if you look at if you compare the two total outstanding rows, you'll see the checks on the left side is $3,580, but on the right side is $2,805, and all the amounts in that column are the same. So it probably jumped out at you right away. But basically all that happened on this one was a formula error. And so in this case, the first two outstanding checks for $475 and $300 are not being added up into that total outstanding row. And so in this case, it's just an Excel formula error. And that's why it's kind of important where if you do come across a difficult bank reconciliation, your first thing you do might be to print off everything, start highlighting and doing stuff like that. If you're doing Excel, definitely look at the formulas right away. It can definitely save you a lot of time from having to go through and re-highlighting what was cleared and what wasn't cleared. So in this case, it didn't go as according to plan, but if you just check those formulas, you'll definitely be able to find that difference right away. And a couple of other examples of common issues I see. If you come across in that check figure where it says difference is off by $81 or $54, $27, something like that. The point I'm trying to make is if you take the individual digits from those numbers, so 27, 54, 81, and you add up those individual digits for each number, it adds up to 9. And if that happens, chances are all that you did was you transposed a number. So I'll use the first outstanding check as an example, which is $475. If you accidentally put it as $457 instead of $475, you would be off $18. And so that's where if you come across a situation like that where it's just a simple transposition error, all that you have to do is look through all the numbers and you could probably find it. Another common one I see is you might be off by $30 or $300 or $3,000. chances are that you, instead of putting $30, you put $60. And if you picture like a number pad on your keyboard, those numbers are right next to each other. So chances are it's just a quick mistake as you're entering the numbers where you put 30 instead of 60 or 300 instead of 600. So again, like just a couple ideas for if you run across situations like that. And then as far as any tips and tricks, the first one I have is basically if you are able and your software has it available to you, definitely utilize your software. It can definitely help prevent a lot of human error. I showed you an example where it's just a simple formula error. I also gave you a couple of examples where it's just basically you type the number in wrong. Utilizing your software would prevent those. Not as much printing and highlighting. I'd say it's definitely a faster process utilizing your software. And it's something you pay a lot of money for, so you might as well get as much out of it as you can. If that is not an option, I know some smaller entities rely on Excel and their bank statements, and that's fine. But if that's not an option, utilize Excel. It's definitely better than basically doing it on the back, on like the back of the front page of your bank statements. Utilize Excel. That way you do have the formulas, you have the sum function, you have all those functions. So utilize Excel if you can, because that can help prevent some human error, but not all. And then again, verify your formulas all the time. It can be a situation where you come across something and you think it's going to take the whole day to fix. It might only take 5 minutes. So verify your formulas first, and that can help prevent any wasted time. Perform these timely. Typically, you'll get your bank statement probably 6 or 7 days after the previous month had ended. And so I'd say if you have the time, do it as soon as possible. Definitely don't wait, for each quarter or for each year, or definitely not decade. But see if you can perform these timely, just because it can help if you do run across issues. The information is more freshly in your mind, and so it can definitely help you save some time that way. It's always a good idea to have someone else review it, and this is in cases where you have issues or if you don't have issues. In the case of if you have issues, having a different set of eyes on it can definitely help out the process and it'll make it easier to find the issue. So definitely have someone else review it. It couldn't be another member of the accounting department staff. We have clients who have a separate finance committee with a couple board members and maybe a school business manager, for example, and they'll meet monthly and they'll go over all the finances, which will include their bank reconciliation. You can also present your bank reconciliation at monthly board meetings as well. Again, just another set of eyes on stuff never hurt. And this is even good in cases of when the bank reconciliation went fine. It's always a good idea for everyone to be in the know on, including your board, your finance committee, other accounting staff, on what is going on, even in situations where it's good. Look at old outstanding items on your reconciliation. I say that because there may be instances where maybe you double entered a check. And so if you're doing your 2022 bank reconciliation and you have a check that is outstanding that was a 2018 check, there's probably something going on. And so it could be that you double entered a transaction. And so say if you wrote a check for $10,000 to the implement down the street twice and they cleared one of them, you might actually have more cash on hand than you actually think. So definitely look at your old outstanding items. There might also be situations where the vendor you sent the check to simply didn't get it. Typically, vendors will reach out to you on their own, but it might be a good idea to reach out to them to see what's going on and if you may need to issue them a new check. Look for any cutoff issues. An example of this would be if you have a check that is cleared on your December bank statement, December 2022 bank statement, but you didn't write it in your software until January 2023, those numbers aren't going to jive. So definitely look for cutoff issues. You should not be marking something as cleared if it hasn't actually taken place yet or shouldn't have. So chances are in your software, your check date was just put in wrong or something. So definitely look for cutoff issues. And then last, but definitely not least, is save it so that the pesky auditors can see them. And so I hope this presentation helped assist with any questions on the topic. I know whenever I try and train staff or give tips to clients, I always try and help them understand, what it is that you're doing, but also why you're doing it. Just because if you understand the why behind it, I feel like you are better equipped to troubleshoot any issues that might come up. So I hope that this was helpful. And I hope that, like I said, you may do 99 bank recons that each take 5 minutes or 10 minutes apiece. Then that 100th one is the one that gives you issues. And so I hope that when you finally balance that recon, you can have a little satisfaction like the little guy in this picture here. Thank you.
Wonderful. Thank you, John. We are now going to take a break for lunch. So we'll look forward